Hi, this is Skylar with Regan. Today we're going to go through a handful of charts to talk about the wealth effect and how U.S. wealth has increased since COVID. This chart here is from Fred, household net worth level. If we go back to 2020, the gray lines here represent recessions. What's of note here is that in the GFC, U.S. household wealth only dipped about 5 to 6 trillion, about 10%. You can see here this minor recession we had during COVID didn't last very long. But if we start here, Q4 2019, Q1 2020, U.S. wealth went from 110 to 103 trillion. Today it stands at 147 trillion. Okay, so we're talking about a growth here of $44 trillion in U.S. net wealth since COVID. Let's go through some other charts because folks will bring up, what about debt? What about credit card debt? What about student loans? I'll show you that all those really pale in comparison to this number right here. Okay, so let's look at public debt. Stands at about $34 trillion. That's Fed balance sheet, Fed spending, etc. The Fed has roughly spent about $11 trillion to create $44 trillion in wealth. That's a great investment, in my opinion. Household debt, and this is from the Fed, household debt stands at about 18 trillion. Okay, so 18 plus 34, it's about $52 trillion. But going back to this is $144 trillion in net worth. That includes debt. Let's look at credit card balances. Yes, rising faster than it ever has, but it still stands at under $1 trillion. Student loan debt is actually topped off. You've seen some forgiveness here. Stands at about 1.8 trillion. So student loan debt plus credit card debt is under $3 trillion combined. Again, pales in comparison to $147 trillion. Let's look at real estate. What are the largest causes of this wealth growth? First of all, you have real estate, which has gone from 30 trillion to $45 trillion. That's a gain of roughly $15 trillion since 2020. But that includes debt and equity. Okay, if we look at equity alone, 20 trillion to 32 trillion. It's about a $12 trillion growth, whilst debt on real estate has only increased roughly 3 trillion over the last 4 years. So huge total value growth, much of which has been contributed to home equity, 12 to 13 trillion dollars. Let's look at the stock market. Total market value of U.S. stocks. Let's go back. Let's look at 5-year. Troughed in March of 2020 at 24 trillion. Today it's at 55 trillion. But if we go from the start of that year, 2020, 30 trillion to 55 trillion, that's a growth of $25 trillion. So you have $25 trillion in stock market growth, plus about $12 trillion in real estate growth, adds up to about 37 trillion. What else? Other assets like cars, valuables, also private companies. So private companies, other assets, real estate, and the stock market has grown to the tune of $44 trillion since 2020. Well, what about savings rate? Okay, savings rate, folks will tell you savings rates at all-time lows. Okay, this is from the BEA. Saving rates down to 3.2. That is only W-2 income minus expenses and taxes. Okay, that does not include the wealth growth. Surprisingly, the wealth effect really wasn't even thought about until Alan Greenspan discovered it in the 1970s. But what we can see here is that the cat's out of the bag. If we think about what's causing inflation, what's causing spending, what's causing prices to go up, this is a number one here. Folks that have accumulated assets from real estate, other assets, and the stock market to the tune of 44 trillion. This is what is the most important thing to look at, in my opinion, when we think about where rates are going. Thank you.